Hey, it's Mike, and today I want to talk about gold because a lot of people are really not talking about gold right now. I think a lot of new investors who got in this year because of the Robin Hood's free stock trading and maybe the stimulus check, there's a lot of focus on hot stocks and penny stocks. However, I do want to make you aware of gold because there is a very particular pattern between gold and the S&P 500. So what I have here is just a gold one-year chart, how the commodity has performed in the past year. And you'll see it has performed pretty well, probably not as well as some of those hot EV stocks. But the thing that you have to know about gold and S&P is that it seems like every other decade, gold outperforms the S&P. So let's go all the way back to the 1970s. You had Richard Nixon who closed the gold window from 1935 to the early 70s, the price of gold was pretty much fixed at $35 an ounce, and Richard Nixon closed the gold window, and that caused the price of gold to really skyrocket, and you had the price of a lot of commodities in the 1970s skyrocket, while the prices of stocks were pretty much depressed. They really didn't go much of anywhere. So you had the price of gold really go up high in the 1970s, and then the price of gold crashed in the 1980s, and then you had stocks take off because Reagan did a lot of tax cuts. He cut capital gains tax, and the prices of stocks continued to rise, and they rose all the way from the 80s into the 90s, and then you had the tech crash in 2000, and then stocks crash, and then gold took off in 2000 and continued to take off all the way through the end of the decade. And if you know about the 2000s, the S&P 500 literally went nowhere because it crashed in 2000, kind of rose up in 2005, crashed again 2007, 2008, and pretty much had no gains for that entire decade. It was a lost decade for stocks. Now in the 2010s, you had the S&P 500 take off. So let me just show you the last 10 years of the S&P 500. If you look here, starting, let's just show you here. This is the S&P 500 in 2000, and this is where it ended up in 2010. So you see it went nowhere, but this is the S&P for the last 10 years. Look at that. It's just a straight line up. And if you look at gold for the last, let me go all the way in max here. But if you see from 2000 to 2020, gold has gone nowhere. So what looks like is going to happen is that gold is going to have a huge decade in the 2020s, while stocks, who knows, stocks may perform okay, but they may have another lost decade. So what would accelerate gold's rise up? Well, we've had this situation, the shutdown situation, and you've had a lot of money that's getting pumped into not just the US economy, but the Chinese economy, European economy, all economies around the world are pumping in stimulus just to keep people working and keep people out of poverty. And when you have all that fiat currency being pumped into the system, the price of commodities like gold and silver are most likely going to go up. So I do believe that we're probably in the first phases of a long-term bull market in gold that will probably continue this decade. And there's a possibility that gold could outperform stocks. So you should definitely keep gold. Also, gold miners in your radar. You probably already heard the news that Buffett invested in Barrick Gold. Now, Barrick Gold hasn't really done much, for the time being. However, gold and gold miners are definitely something to watch. It's going to be on my radar, and I'll keep you updated. If gold breaks out above its previous high of 193, at least on the GLD ETF, it could go much higher. So I'll just keep you aware of that. If you enjoy this video, please be sure to leave a like and go ahead and subscribe, turn on notifications. I do multiple updates on the stocks, stock market, commodities, penny stocks, and all that stuff each and every day. Okay, thanks. Bye.